Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, October 17th, 2025, and here is everything you need to know as the markets open for today. US markets had a rough session on Thursday, with investors spooked by renewed concerns over the health of the banking sector. The Dow Jones Industrial Average fell 301 points or 0.7% to close at 45,952. The S&P 500 dropped 0.6% to end at 6629, while the Nasdaq Composite declined 0.5%, finishing at 22,562. What started as a positive session, driven by optimism around artificial intelligence demand from Oracle's strong forecast and Taiwan Semiconductor's bullish outlook, quickly turned south after two regional banks reported alarming bad loan write-offs. Zions Bancorp plunged 13% and Western Alliance Bancorp tumbled 11% after disclosing significant loan losses. This comes on the heels of JP Morgan Chase taking a major write-off related to the collapse of auto lender Tricolor Holdings, raising fresh concerns about hidden weaknesses lurking in the financial system. As fear gripped the market, investors fled to safety. Bond yields fell sharply with the 10-year Treasury note dropping below 4%. Gold surged to yet another record high, breaching $4,300 per ounce for the first time. Even Bitcoin slumped, while a regional bank fund crashed over 6%. These credit concerns are expected to remain a key focus as Wall Street heads into a massive $3.4 trillion options expiry today. Turning to Indian ADRs overnight, it was a sea of red with most stocks posting declines. Infosys ADR fell 2.13%, while Wipro dropped 2.19%. On the banking front, HDFC Bank ADR slipped 1.69%, while ICICI Bank was relatively flat with just a minor decline of 0.13%. Overall, the weak sentiment in US markets and sector-specific pressures weighed heavily on Indian stocks traded overseas. Asian markets are set to open lower this morning, tracking the overnight sell-off on Wall Street. Futures for Japan, Hong Kong and Australia all pointed to a weaker start as banking sector worries and US-China trade tensions continue to weigh on sentiment. Bank Nifty is currently trading around 25,600, indicating a modest gap down opening for Indian markets. That's roughly 50 to 80 points lower than yesterday's close of 25,585. While this suggests some near-term caution, the broader trend remains supportive as Bank Nifty has been holding above key support levels. Overnight, Asian sentiment was dampened by the credit concerns emanating from US regional banks. Additionally, escalating trade friction between the US and China is adding to the uncertainty. Markets across the region will be closely watching for any further developments on the trade front, especially with President Trump and Chinese President Xi Jinping expected to meet later this month at the ASEAN summit. On the global front, US-China trade tensions are back in the spotlight and threatening to derail the fragile truce that has held since spring. China has accused the US of stoking panic and economic coercion and has retaliated with its own measures, including new port fees on US vessels and an antitrust probe into Qualcomm. Treasury Secretary Scott Bessent labeled China an unreliable partner and vowed the US would fight to protect its supply chains. Both nations have also imposed additional shipping port charges effective this week, raising concerns that maritime trade is becoming a new battleground in this economic war. For India, the impact of Trump's 50% tariffs continues to bite. September trade data showed Indian exports to the US fell 21% to $5.43 billion, with labor-intensive sectors like textiles, gems, and jewelry bearing the brunt. New Delhi is in talks with Washington for a trade deal, but the outcome remains uncertain, as Trump has also claimed, controversially, that Prime Minister Modi agreed to stop buying Russian oil, a statement India has officially denied. On the domestic front, it was a strong session yesterday, with both Nifty and Bank Nifty surging over 1% each. Foreign institutional investors turned net buyers after days of selling, pumping in nearly 1,000 crores, while domestic institutional investors remained aggressive buyers, adding over 4,000 crores. This shift in FII sentiment, combined with strong domestic demand and positive earnings season momentum, is boosting market optimism. On the earnings front, today is a blockbuster day with over 80 companies set to report quarterly results. Reliance Industries, JSW Steel, Havells India, Dixon Technologies, Polycab India, and L&T Technology Services are among the heavyweights announcing numbers. Yesterday, Infosys reported better than expected results with a 13% jump in profit and raised the lower end of its revenue guidance. Wipro also posted modest profit growth but highlighted that discretionary spending is increasingly tilting toward AI projects. Let's talk technicals. Nifty closed yesterday at 25,585 after a strong rally that saw it break above the crucial 25,400 to 500 zone. This breakout is significant as it clears a key resistance level that had capped gains for weeks. Immediate support for today is placed at 25,500, followed by 25,400. On the upside, resistance is seen at 25,700 and 25,800. A decisive move above those levels could open the door for Nifty to test its calendar year high of 25,669 and eventually the all-time high near 26,300. Bank Nifty is even more impressive, having closed at 57,423, just a whisker away from its all-time high of 57,628. Strong private bank results are fueling this rally. Support for Bank Nifty today is at 57,100 and 56,900. While resistance is pegged at 57,600 and 57,800. A breakout above the record high could trigger fresh momentum toward the 58,000 mark. Overall, the structure remains bullish, and traders are advised to follow a buy-on-dip strategy while maintaining strict stop losses. In commodities, crude oil continues its downward spiral, with WTI falling to $57.45 per barrel on Thursday, the lowest level since May. Brent crude also slipped to around $61.06. Weak demand concerns, a larger-than-expected U.S. crude inventory build, and escalating U.S.-China trade tensions are all weighing on prices. There's also confusion around Indian purchases of Russian oil, with conflicting statements from the U.S. and India adding to volatility. Bank of America has warned that Brent could fall below $50 per barrel if trade tensions worsen further. Gold, on the other hand, continues its relentless march higher, breaking through the $4,300 per ounce barrier overnight. The precious metal is being driven by safe haven demand amid banking sector fears, expectations of more Fed rate cuts, and broader concerns about market stability. In India, gold prices surged to 1,30,007 rupees per 10 grams for 24-karat gold, up over 2.6% from yesterday. Silver, however, saw some profit booking, falling nearly 6,000 rupees to 1,68,083 rupees per kilogram after hitting record highs earlier this week. So what's the game plan for today? With global cues turning cautious due to US banking worries and trade tensions, expect some volatility at the open. However, the domestic picture remains constructive with strong FII and DII flows, positive earnings momentum, and technical strength in both Nifty and Bank Nifty. My suggestion, stay focused on stock-specific action driven by earnings today. Companies reporting solid numbers could see sharp moves. On the index front, any dip toward 25,400 on Nifty or 57,000 on Bank Nifty could offer good buying opportunities for traders with a short-term horizon. Keep your stop losses tight and don't chase the market if we see a gap down opening. With options expiry on Monday due to holidays on Tuesday and Wednesday next week, be prepared for intraday swings. Stick to quality names, avoid over-leveraging, and let the price action settle before taking aggressive positions. The broader trend is still bullish, so use any weakness as an opportunity rather than a reason to panic. That's all for this morning's market wrap. Stay tuned for the evening show, where we'll break down all the action from today's trade. And if you have questions or want us to cover a specific stock or sector, send them in. Until then, trade smart, stay disciplined, and let's make it a profitable Friday.